The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 8th, fabulous Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I do everything we can to have an extraordinary weekend. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstances. Today, you and I, we get to go look at the circumstances of the bulls and the bears, the buyers and the sellers. I want you to know that I'm absolutely grateful for your presence here. More importantly, though, I'm here to serve you. So feel free. Pick up that phone, dial on in, 877-927-6648. Internationally, 727-445-1044. Would love to hear from you on this fabulous Friday. Of course, this is the Hotel California, sponsored by none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow. She's trading up 5 points at 16,519. S&P is flat at 1942. NASDAQ Composite up 3 points at 4693. Russell 2000 up 5 points, trading at 10,000, not 10,000, but 1058. Yeah, 10,000 will be a few years from now inside the Russell 2000. Gold is back $8. She's trading at 10.99. Silver's off 35 cents, trading at 13.99. Light sweet crude is flat at 33.27. Lead the chart here to the upside, China Biologic Products. Don't know what they do. Something biologic, I would guess, up 4.5%, $6. Equinix, that's up $6, 1.8%. Huntington Ingalls, that's up about, where are we at here? Sorry there, about 3.5%, up 450. Amazon is up 350. To the downside, Priceline lead the charge dollar-wise. That's off $14. Boston Beer, Sam Adams, that's off $11. That's nearly 6%. MicroStrategy down 7%, off 11. Google's off $8. Let's go to our first caller. Let's go to Paul in California. Paul, thanks for calling. Thanks for holding. How are you doing this afternoon or this morning?
I'm doing great. Good morning to you, Steve Rhodes.
Thank you.
Thank you, Paul.
Thank you. I appreciate the call. Now, I don't think I have the right ticker symbol, or if I do, I'm going to be in trouble out here. Is it the XIB?
XIV, as in Valerie.
Got
All
it.
right.
Okay. So you're trading a VIX vehicle. Tell me that's the velocity shares daily inverse VIX. So tell me what you're doing and how I can best help you.
I'm looking to buy it here, maybe on the low of the day. Hold on, my chart just got messed up.
No
Sorry
problem.
about that.
That's all right.
And I wanted to see what you see, or hear what you see in the chart, and see if I'm on the right page with a possible rally in the works here and a push up in the XIV.
So, you know, what you're trying to do here, your anticipation is that the VIX index is going to fall. Is that correct?
That's correct.
Okay, now, I'm not familiar with the XIV. Do you by any chance know what the underlying instruments are for XIV? For example, in UVXY, I'm very familiar with that, in that the instruments that that is based around are the two futures contracts. In this case here, for UVXY, it would be the February and March. February would represent 60%. March would represent about 31%, and that difference, 9%, is usually in cash inside of the fund. So I'm not familiar with the XIV. Do you have any? Is it the same? Do you know, or?
I believe it's the same, just the opposite.
Okay. So that's great. So that's, that is the first most important thing to take a look at. And the reason that you want to go ahead and take that trade by the end of the day is you're anticipating something taking place Sunday night, I'm just trying to understand the thought logic here. Not that that's a bad thing. I'm just trying to.
Either Sunday night or first thing Monday morning, maybe having an initial bottom and then a spike back up in the overall market.
Okay. So, here's how. So you got a couple different ways to play it. Obviously, if you're going to take that trade, so if we could see some type of move in the market today by the end of the day, meaning some type of bullish signal, then I would say, okay, you've got the U.S. maybe handing things off to Asia in pretty good shape out here, and we've got some reversal patterns, and therefore, okay, I could buy into it. If we don't have those reversal patterns by the end of the day, I would say, risk reward depends on what your tolerance is for risk and reward. You might be better off to wait until Monday for that trade. That's really how I would take a look at it. Now, I can tell you that we've got nearly 3 hours left in the trading session. And if I take a look at the NQ, for me, the market right now, if it's going to make any kind of move higher or lower, it's going to be a result of what takes place inside the NASDAQ. Because that has really, from an energy standpoint, led things to the downside. Now, what I have on my chart right now, Paul, is I've got the 2 hour. Are you watching this on TigerTV?
Yes, I am.
Okay, perfect. So here's what you and I know about the 2 hour chart for the NQ. One is that earlier this morning it was moving lower with less relative weakness out there. Those are the black diagonal lines that are on my screen out here. The second thing that we know, as far as patterns that we would like to see where there could be a potential reversal, would be that it has moved down into a seventh wave move. Oftentimes, if the largest reversals of fortune or unfortunate are going to be when you have the combination of those patterns. The other thing that we have going for you inside the NQ, we'll switch back and forth between some charts out here, is we have an A to B equals CD to the downside. So let me pull that up on the screen as well, and we'll flip back and forth. Here is your 5 hour chart. So we were just looking at a 2 hour chart, but here's your 5 hour chart. And what we can see is from the high out here on December 2nd, inside of the NQ, makes its first wave move to the downside. That wave takes you down to a price point in December 14th, somewhere around the 44.71 level. Then it makes nearly an entire retracement to the upside, 86% retracement to the upside out here. And then things just simply fall off the planet out here. We have the Asian contagion. Really, it started December 29th, so it started before that inside of the NQ out here. What we know is that on the daily chart or the 300-minute chart or any time frame, I just have the 300-minute chart out here, is that we actually have a Gartley buy pattern, a potential Gartley buy pattern that is in place. And that is a 0.618 Gartley buy pattern. Are you familiar with those patterns by any chance?
I'm learning them right now, so This is a great lesson. I appreciate it.
Okay, all right. So what we're going to do is we're going to go to a commercial break, and then when we come back, you and I, we're going to take a look at the potential patterns that are out here, because we want to take a look at both sides of the trade. We want to say, hey, if this fails, where is price likely to go to? And that way, Sunday night, you can be planning your trade as well. So this is Steve Rhodes with Paul from California, and we'll be right back.
Awesome.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We are taking a look at the NASDAQ, the NQ, the futures contract. The reason that we're doing that is we're on the line with Paul in California. He's looking at trying to take a trade in the XIV, which is a VIX ETF, which basically is taking a look at the implied volatility of the S&P options. But we're taking a look at the NASDAQ. And the reason, Paul, that I want to look at the NASDAQ is because it has the better patterns out here, the better patterns that are potentially bullish. And so if these fail, this will suggest to you to just simply stay away. Likewise, I can give you some targets to look at by 4 o'clock, and then you can make that determination, whether or not you want to go ahead and take that trade. So when we left off, we were taking a look at the 300-minute chart, the 5-hour chart for the VIX. What we can see, if you're watching us on TigerTV, is thus far it has made a 1 to 1.618 A to B equals CD pattern. Now, A to B equals CD patterns are lightning bolt patterns. They make a 1-to-1 about 40% of it, 60% of the time. The other 40%, they make some extension of that. Now, the nice thing is that where price is trading at right now is really right around the 0.618 retracement level, off of the lows from back on September 29th. So this is, and we do have a nice bullish reversal signal, little bear sash candle, bearish engulfing style candle that took place at last evening. And so we have a nice reversal signal out here, and that's why you and I want to pay attention to it. And on the 2-hour chart, you and I were looking at a pattern, which I like to look at, a 7th wave move, as well as price moving down with less relative weakness. On this 5-hour chart, what you're going to see is the same pattern setup. So on 2 different time frames, we can see that price doesn't necessarily have the conviction behind it, or at least it has not had that yet as prices move lower. And that's what you like to see if there's a trampoline. So are you good with me so far? Uh-oh. Did I lose you, Paul? I must have lost Paul out there. Well, I'm hoping that Paul is actually listening in on the radio as well. So folks, if you're watching us on Tiger TV, you're looking at really a beautiful pattern set up for a reversal. Now, how are we going to know if this really has a chance to work out here? Well, what you and I are going to do is we're going to go take a look at the 30-minute time frame. So we're just simply going to go from a 5-hour chart to a or 300-minute chart to a 30-minute chart, because there's also another beautiful pattern here that will tell us whether or not, let me get rid of these market profiles out here. Let me get rid of a few things. There we go. Okay. And that is this. There is a beautiful trend line that is in place on the 30-minute chart. And that trend line starts all the way back here at about 12:30 in the afternoon on December 31st. And if you, Paul, on your chart, if you just simply take, oh, this is the ES that I'm looking at. That's also a beautiful trend line, by the way. Let me put up the NQ out here. So they both have the nice same trend line out there. But if we, oh. Okay, you're back. You're back. Okay, good. So here, put the trend line. This trend line here, again, the same candle, 12:30 in the afternoon, December 31st. Your next touch point out here is going to be at about 7 p.m. on January 6th. And what we can see is that this morning, was it this morning or late last night? It was this morning, between 8:30 and 9, that initial push-up, this was after the jobs report, where it ran into resistance. And that's the beauty of this, so that you'll know whether or not to go ahead and execute that trade, is price stopped right at that trend line. Now, this trend line had been drawn in there, a day ago or so, and price stopped right there. So if you put that trend line on your system, and if by 4 o'clock you start to see the markets move higher and you see a close above that, I would say that that would be an early signal for you to go ahead and consider taking that trade in XIV. And if it doesn't happen, then I just think you want to go ahead and sit patiently and wait till Monday and see what other pattern plays out there. So that's how I would look at it. But go ahead and fire away with whatever questions you might have.
Awesome. No, that was a great explanation. One more quick question. In terms of the Gartley, where would you recommend to find, some good information to get my education up and rolling on that?
There's only one source, baby. It's here at TFNN. So you're in the right spot. What I would recommend that you do is, if you go over to I gave you the second best source, but it's with inside TFNN. If you go over to Amazon as an example, and put in Larry Pesavento's name, there would be 2 books that I would recommend. Those 2 books would be Trade What You See. But the better book is, or an additional book to take a look at is, he's got some other paperback book that really talks about Fibonacci and Gartley patterns, and I would recommend any of those. And then the third option is, I've got a great workshop that you could take that really, what it does is it consolidates, in essence, decades into hours, that really teaches you about the patterns and how to trade them. So, and you can just talk to the folks at TFNN. And those would be the 3 best sources to learn about the Gartley patterns.
Awesome. Hey, Steve, do you have time for one more quick question?
I've got time for 2.
Outstanding. Hey, I just got a text from my uncle who is looking at Green Mountain Coffee. I don't have too much information, but all I know is that he's looking to set up a short position in the ticker symbol GMCR. If you could just give me your analysis on what you think, that would be awesome.
Well, the interesting thing is, maybe somebody in the den did Green Mountain Coffee Roasters, just make sure I've got the right data. Folks, maybe somebody in the den can help me out here. Did this thing really gap up on December 7th? Because what I'm looking at here, Paul, is I see a close on December 4th. I just want to make sure the data should be good, but I'm seeing a close at around 51.70, and I'm seeing that this thing had opened up somewhere around the $90 mark out here, which is one heck of a sign of strength. So I don't really know what took place out there. Maybe, is there a buyout? Was somebody looking to buy them out? At this stage here, what I'm looking at, Paul, it'd be really tough for me to say short this, because this thing has, if this chart is right out here, I'm not seeing it. Okay. Yeah, I just there was something. I would have to look it up. You might want to just go ahead and search to see. And I would just type in Green Mountain Coffee Roasters inside your search engine on December 7th. I am assuming that this is correct, but that is a huge sign of strength, huge gap up. And, I'm not seeing it's a buyout. Oh, it was a buyout. Thanks, Tom. So, yeah, so if it was a buyout, I wouldn't touch it with a 10-foot pole.
Awesome. Thank you so much for your time. The show is great. I'm learning a lot, and have a great weekend.
You bet. Thanks so much for listening. That was Paul in California. And, things happened for us. So that was great because Paul really, when he called and was, asking about the XIV, and we really went in and took a look at on the shorter term basis, hey, what is the market doing? Well, we didn't cover there, and let's just take a look at it, is if these patterns fail, what we would anticipate the NQ would do would trade down to the next level. That next level in the A to B equals CD chain would take you into the 0.786 retracement. That would be a 1 to 2 A to B equals CD. And for those of you that own the art of timing the trade, what you would know is that when you do a 1 to 2 A to B equals CD, your chances increase that the market is going to do something different. So maybe that is where the market makes a reversal, and that's at a price point of about 41.84, 41.70 inside the NQ. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow off 15, S&P down a couple of points out here. And so let's take a look at the week for the most part. And, obviously some significant damage that was done, unless there's some kind of miraculous reversal today. And that's always a possibility. You can anything should be when you least expect it, expect it. But if we do take a look at the Dow Transports, this is now the first time. I know that the Dow Transports, and then people have been looking at it saying, hey, look at these things moving lower. What's it mean? All that the Dow Transports was doing up through yesterday was just simply coming back to test a level of support. Its rising trend line, its rising channel line is what it tested last week. The green line that is on my chart out here is really the rising trend line. And we can see that price is now closing below that. And that is important. So the damage that has been underway inside the transports, in essence, since November of 2014, now it's in a serious state. Why is it a serious state? Because when you break trend lines, that says that trend that we've been in since March of 2009 is definitely no longer your friend. Now, what you really like to see when any kind of trend line is broken, and this would hold true for Paul and trading the XI, the XIB or the NQ, whatever you might be trading out there, is if price gets above that trend line that we looked at and it comes back, tests a rejection, and moves higher, that in essence is your confirmation. So next week will be important for us to watch what do the transports do? Do they test it, reject it, or do they get back inside there and say, hey, I don't like it on the other side? We also happen to have, this will be the first time that we have the New York Stock Exchange on a weekly basis close below the long-term trend line. And again, that is a trend line. That's the green line on my chart. That's coming off of the March 2009 lows out here. Every other time, when I say every other time, we don't have that many examples, right? We can go back to the 2000 highs. We can go back to the 2007 highs. When that trend line was broken, not just broken because it was tested. When it was broken, it failed. That is what began the moves lower. That is what began. Now, to what extent, where those moves are going to take us to, I don't know. But this here, with regard to the wider swath of the market, not good. So you've got the New York Stock Exchange right now below, for the first time on a weekly basis, going to close below its trend line out there. The Dow Transports look like they're going to do the same. The Dow itself has closed below this trend line once before. It did that back on the week that began August 31st. That makes sense, right? That August 24th level. And it stayed below that for about a month. It got back inside that trend back on October 5th out here. So, it tested, finally got back inside, ran into, of course, another descending trend line that began out here in May of 2015. So, the Dow Transports, the New York Stock Exchange, they have given it up. Now, the other indices have not, or at least some of them that we're taking a look at. The Russell 2000. Let's go take a look at the Russell 2000, because this is when everybody is looking, the reason that I always suggest that you look at both sides of the trade. It's because it's a scotoma. A scotoma is nothing more than something that is in front of you. You just don't see it. I always like to use it's kind of like, and you see them all the time, right? But maybe you buy a shirt or a belt or a car or something like that, and you don't really see it till you actually have it. Or maybe somebody asks you to get something from the refrigerator. You're looking, you don't see it. They come over and they say, hey, it's right in front of you. Well, that's the way that life sort of works out here. And if you are just focused on only the bullish side and you're not looking at the bearish side of the trade, you're doing yourself a disservice. You're best to just kind of clean the slate, come back and look at the opposite side of the trade. That was just simply a lesson taught by Thomas Watson, and I think it's a great lesson. So let's take a look at the Russell 2000, because the Russell 2000 has been weak. Certainly, it hasn't broken its, well, you don't know certainly. Let's just take a look at it. Here's the Russell 2000. Let's put this on a weekly chart. Let me show you what we're taking a look at. So I'm on a weekly chart, on a monthly chart. So as we take a look at the monthly chart here for the Russell 2000, you're going to see that so far it has not pierced its rising trend line or its channel line. The yellow lines on my screen out here are the price channel. Now, what's the difference? The difference is that when we take a look at channel lines, we're using the body of the candles. Body of the candles, they are the essence of price. If I switch this from a monthly to a weekly to a daily, the channel lines are going to look a little bit different because we're using the open or closing session of the candle. It's going to be different on a monthly than it is on a weekly, on a daily. The trend line, that becomes pretty easy. We're just simply using the extreme emotion of the candle. In this case here, we're using the lows because we're using a rising trend line. And we can see that price inside the Russell 2000 has not pierced that level out here. If that does pierce it next week, you get a close below it, to be another one that has bitten the dust. So we know that is what's going on inside the Russell. We also know that the Russell 2000 is now, it's still not trading below the October 2014 level, but it is trading below the August 2015 area. But we can see that price is really right up against support. So I spent some time today. Last week, we took a look at, and I think it might have been last week on Friday, on New Year's Eve. Hey, Happy New Year, 1 week into the year out here. And we were taking a look at the NDX 100. I had just completed doing some work on the NDX 100, trying to find out some volume patterns that you and I could use that we could really rely on. Because some of this daily volume stuff, it's not reliable, at least providing you and I with signals, at least not reliable in the way that I would like to use it. So here's what I've done inside the IWM. You know, a lot is made and should be made with regard to the advanced decline line. That's taking a look at advancing issues and declining issues. And inside this chart here for the IWM, as an example, that happens to be the middle section. That is the advanced decline line for the Russell 2000, in this case here, the IWM. The bottom line, when I say the bottom line, the bottom panel is the up volume, down volume. I've created an oscillator for that to be able to track divergences, to see, because many times I've seen where the advanced decline line, when I take a look at the Russell 2000 or other advanced decline lines, where it just doesn't seem to be providing us with meaningful information out here. So I said, let me go take a look at, for those issues, the up volume and down volume, especially for, you know, something that's got 2,000 more than actually, I think, the Russell 2000 might even have less than 2,000 constituents in there. I'd have to look that up. It doesn't really matter out here. Now, what I'm going to do is I'm actually going to pull back to some previous times, right? Because as we take a look at it, and in fact, we're going to take a look. Let's come back to the 2007 time frame out here. Let me pull this back. I did some of this work ahead of time. So let me get back to 2000. Now, when you take a look at this bottom section out here, again, the advanced decline volume oscillator out here, you're going to see that basically the direction of price, and if you're looking at the bottom line out here, it's smoothed out nicely. You know, it is truly following along with the direction of price. Now, not always. And that not always is when you get those divergences, that makes you say something more than, something to think about. So let's come back to the 2007 top inside of the Russell 2000. That actually took place on the trading day of July 9th, 2007. And what we can see out here, we'll go ahead and put a line. We can see that price here had been moving higher. We can see that the advanced decline line had already, that's the center section that you and I are looking at, had already started to fail. But take a look at from the volume perspective. It has started to fail in a huge way out there. That was a nice little signal of a top. We're going to take a look at some more of these signals out here, and then we'll carry it forward to today. Because when we carry forward it to today, well, really through yesterday, it is going to make us say, that's interesting. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow 25, S&P is up 2. So we were taking a look at the Russell 2000, the IWM in this case here. We're taking a look at price divergences, the advanced decline line, a advanced decline volume oscillator line out here, which is really telling. If we take a look, so we take a look at the top that formed in 2007, and when we take a look at the first really significant bottom during that time period inside the Russell 2000, took place right on March 2008, March 18th or so, 2008. And what we can see here is the first move to the downside took us to January 23rd, 2008 inside the IWM. A little bit of a bounce that took place out there, and then price came all the way back down and basically made a double bottom, triple-ish type bottom out here. But while it was doing that, take a look at the bottom panel of my screen. Take a look at what the volume oscillator was doing, making higher lows out there. That's the type of divergence that says, hey, you're going to get a, you're going to get a reversal. You're going to get a decent bounce out here. Take a look at, we just fast forward here into November 22nd, 2008. We can see that price was moving lower. And what was the volume oscillator doing out there? It was making a double bottom. Price goes ahead and bounces from there. We have price here back in 2009. So now we fast forward to March 9th, March 10th, 2009. Inside the Russell 2000, we can see price was making a lower low. Even the advanced decline oscillator out here, that's the center panel, was also making that lower low. But take a look at what the advancing issues, the declining issues, what that volume oscillator was doing out here. That was making a higher low, right? Very significant. If we take a look at some other periods of time inside the Russell 2000. The market here made a fairly significant bottom back in August of 2010. We can see that the Russell 2000 was making a double bottom. We can see even the advanced decline oscillator, if we're using that, that was saying, hey, there is more trouble ahead. Oh, wrong. As you see, that's where, as I had been studying, really taking, because I can do this for about 100 different instruments. It just takes a lot of time to actually do it out here. So I'm just using the more popular ones, or the ones that really we want to pay attention to. And we can see that if we look at what that volume, now if I try to do this just with the volume statistics, just the volume that you and I take a look at on a daily basis, it's not there. You've got to be able to separate the advancing and the declining volume out here. And take a look at back here at that significant bottom that was forming back in August 2010. We saw what? We saw a rising volume oscillator out here. Okay, let's just fast forward. Now, let's just do one more. Well, we'll do a couple more. Back here in 2011, back in October 2011, the market was making what? Was making lower lows. What was the volume oscillator doing? higher lows out here. Okay, now let's just take a look at where we're at today, because I can give you more and more examples. I think you get the picture out here. So, you can make up your own opinion as far as, whether this makes sense or not. But take a look at the low that formed back here in September. September 29th, right, was a nice low inside the market. We know price was moving lower, at least in the case of the IWM it was. I don't think that it was inside the NQ as an example, but certainly inside the IWM, price was moving lower. In this case here, the actual advanced decline line for the IWM was just making a double bottom, and we had a higher low inside of that volume oscillator. Now, what's interesting here is we talked about how price inside the IWM is actually below the August 24th, the September level, below the August 24th level out here. But take a look at through yesterday. Take a look at that volume oscillator pattern. You can see that it continues. Even if you just take a look at the September 29th issue, you can see that that volume oscillator is not confirming what you and I are actually seeing inside of the market. I heard Basil's show earlier. I only caught some of it. I was, doing multitasking. But I think the one last question, one of the things that he was suggesting was, I don't think that the top that's in right now is the ultimate top or the next big top. And he was saying, I don't know where it's going to come from. Well, if we just stick with the facts, right? Because you and I, we've just gone back. We could take a look at example after example out there, and we take a look at, because we'd go look at the IWM was pushing down into a swing point with light volume, that's for sure. But take a look at this. It's very interesting. As we take, I think it's more than interesting. I think that this is telling us a picture. Maybe this is telling us a picture. Hey, not so fast. At a minimum, this is telling us that a bounce is coming. At the absolute minimum, and actually, what I think that is telling us, it's not like it's just a one-day bounce. It's not just a one-day bounce. That is what I take from the message here of the IWM Russell 2000. We really take a look at the appropriate volume metrics. And we would never have really gotten that by just coming over here, taking a look at the IWM. Let's do that right now. We'll take a look at the IWM. We'll do it on a daily basis. We're going to see that price is trading below swing points, doing it on light volume out here. The one swing point that we'll look at is September 29th, volume of 49 million shares. You're doing 38 today. Hey, that's actually not too bad. That's probably got enough volume to exceed that. I'm gonna guess it's not going to exceed the volume that was back here on August 24th, which was 83 million shares out here. It's not going to exceed the volume all the way back here in 2014 inside the IWM. That was volume was out of 117 million shares. And that doesn't mean that the IWM doesn't punch down and test the low. In fact, I would say at this stage of the game, unless we see a break of that trend line on the 30-minute charts, either for the ES or the NQ, there's probably a pretty good chance that the IWM is going to go push lower and test that 103.54. Maybe it even pushes beyond that. But you want to be looking for a reversal here, because we take a look at what the advanced decline price oscillator is really doing out there. It is not confirming what you and I are looking at. It's one of the reasons why I think that Gartley buy pattern inside the NQ and those other things, they're suggesting to me, at least, that we're going to see one heck of a bottom out here. Buyable, bounceable bottom, and more than just a one-hit wonder, one-day wonder out there. And that certainly is the message as we take a look at oversold readings. We can go all over the place and find really extreme-ish type oversold readings, whether it's in the New York Stock Exchange, NASDAQ Composite, the Dow out here. But those alone are not enough to tell you what the market is going to do. I think it's these other things that you and I put together. I've got a message out here that says, hey, Steve-O, have you taken a look at gold yet? Which I haven't. Wondering if it's pulling back for a buy. Thanks, Bob. But it's not really spelled Bob. But let's go take a look at it out here. If we take a look at gold is pulling back $9.20 right now. 10.98 is the number. And what gold seems to be doing, we talked about those trend lines out there. We talked about the importance of being able to, when you break a trend, come back and test it and prove that you've really broken the trend. Maybe that, in essence, is what gold is doing here, because gold broke through a consolidation pattern that was in place for nearly 2 months. Well, not nearly. Let's call it Yeah, nearly 2 months from November 9th, in essence, to January 6th out here. So 2-month consolidation pattern broke through it yesterday, had nice volume behind that move. Today it has pulled back. The question is wondering if it's pulling back for buy. Well, here's what I would say. Let's take a look and see where there's some potential buy points. Let's look at our TAS market profile. So the first buy point could have already been, most likely will be 1104.10. 1089.40. 1089.40. Why? That happens to be the point of control for the weekly TAS market profile. And that's a beautiful thing. Steve Rhodes with TFNN. We'll be right back.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new Yield Pledge money market account with funds from another financial institution, or deposit new funds into an existing Yield Pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their Yield Pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 10. S&P is flat out there. We began the show by taking a look at the Gartley buy pattern inside of the NQ. And Danny in Atlanta was good enough to point out the butterfly sell pattern that is inside of gold. If we take a look at what that pattern requires, one, you're going to have an A to B equals CD pattern. So we're similar. In this case here, this is an A to B equals CD to the upside. That started down here on December 17th at about 8 o'clock in the morning when price was down around around the 1046.80. Makes your first move up here into the time period of about 12 noon on December 1st. Makes a retracement about a 0.786. Really says 72% on my chart out here, but that's okay for our work. And that was into the December 31st bottom. Then gold does what? Gold moves higher all the way up into the 1.618 A to B equals CD. That's the expansion of that A to B leg out there, just simply applied to the C point. In this case here, what we can also see as that pattern was forming, as price got up to the 11-12-ish area, looks like it got just above that, actually made a nice little shooting star candle. This, by the way, is the 240-minute chart that we're taking a look at. I believe that's what Danny was using out here. Some additional follow through to the downside, and the reason that it was a butterfly is because we just simply are taking a look at the expansion of the swing point, the X point. X marks the spot, and that happens to be that high volume move from December 4th. That probably was a Janet Yellen deal out there. No, that was 8 o'clock in the morning. That was something else on December 4th. But if we look at the expansion from that high down to our A point, we're going to see that that was also a 1.618 expansion of those two swing points. So it's a beautiful butterfly sell pattern. Now, butterfly sell patterns, what they carry with it are 5 different potential outcomes. So let's go ahead. Let's clean this chart up a bit. I'll just get rid of the A to B equals CD. Well, I'll just do it like this. I'll just get rid of it. And now let's take a look at what those potential outcomes are. The first potential outcome is a 0.382 retracement. So from the low to the high out there, your first retracement level would be that 1087. So for the listener who sent me the email out here, and he was looking for a place to enter, and we came up with that 1089-ish area. 1089 was a TAS weekly profile. If this is a real nice breakout, that says that price comes back there, tests it, and holds it. If, in fact, all that price is able to do off this butterfly pattern is simply go ahead and make a 0.382 retracement. That takes you to 1087.80. That will tell us just how strong the move in Goldilocks is. Likewise, if 1087, 1089 fails, that says that price ought to hit the second target. That second target, nothing more than a 0.68 retracement, 1072. So that should be our take on gold. Take a look at both sides of the trade. If we put this on the daily chart out here, that was a short-term chart, we don't have such a reversal candle out here. So make sure that you always stay inside the time frame it is that you are trading, because on the daily time frame, I believe that gold wants to get up to the 1127 and or higher level, more likely than not make its way all the way back to October 15th. But we're going to respect all the patterns that are in play inside of the market on whatever time frames it is that we are looking for. So, folks, hope you have a great weekend. We've got the numbers. Pay attention to those trend lines in the 30-minute chart out here, whether it's the ES, whether it's the NQ. Pay attention to them Sunday evening if you're out there trading. That same trend line is in the Dow, so it's a beautiful thing. If you see a break of that trend line, guess what? Same thing holds. The trend is not your friend, and that trend is the one that led us to the downside out here. So have a fabulous weekend, and I'll look forward to seeing you, hopefully in a much healthier condition on Marvelous and Magnificent Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.